Today we have this question. Sundry creditors in balance sheet before dissolution were rupees 3 lakhs. Half of the creditors accepted stock of rupees 1,80,000 in full settlement of their claims. Remaining creditors were paid at a discount of 6%. Pass necessary journal entries. Okay, now if you get a question like this, I would recommend you to write at the middle of a page a working note first. From that working note, you can directly be able to generate the journal entry by yourself. So first, I'm talking about creditors here. So I will write whatever is given at the center of this page. They are saying that the balance sheet contained 3 lakhs of creditors. So I have noted that here. Now I will branch it off into two because they are saying that half of the creditors accepted stock of 1,80,000. So there is one half of creditors that gives me other half of creditors on the other side. Okay, one half of creditors will be worth rupees 1,50,000. The book value I am splitting into two. The other half of creditors will also be 1,50,000. Fine. Now let us talk about this half first. This half of creditors were settled through stock by giving stock. Okay, how much worth of stock I am giving? I am giving stock worth of rupees 1,80,000 for this 1,50,000 worth of creditors. Now, most of you must have guessed it. We normally, when we pay creditors through an asset other than cash, we don't write journal entry. So the answer straight away is no entry for this. Okay, now I'll explain why it is no entry for this situation in a while, but let me complete the question first. Now this segment of creditors is taken care of for this 1,50,000 settlement. There is not going to be any entry. Now let me focus on the other 1,50,000. When the question doesn't say how this other 1,50,000 is going to be settled, how this 1,50,000 was settled, you have to only assume that it is paid through cash. These creditors were paid cash and that's how they got settled. Therefore, for this situation, and we have to see, yes, there is also a discount of 6%. It's not that the 1,50,000 worth of creditors said that you have to pay me the full amount. They were willing to give 6% discount, paid cash after getting 6% discount. Therefore, book value of creditors paid is 1,50,000 less discount at 6%. 6% of 1,50,000 is 9,000 rupees. Therefore, I paid an amount of 41,000 rupees to the creditors. So the journal entry will be realization account debit to cash account. $1,41,000. Now this concludes the question. The final answer you are going to write will be this. This will be the final answer, and you have to state that for the first half of this solution, there is not going to be a journal entry. Now let us come to the concept as to why this segment doesn't have journal entry. Some of you might have a doubt. Yes, aren't we paying creditors by cash, by stock? Shouldn't that be recorded? Let me tell you. First, let us imagine this is a not dissolution scenario, because you can see the question, it is saying this is a dissolution scenario. So let us imagine, what if it is a non-dissolution scenario, normal day-to-day accounting. In that situation, when I pay off my creditor by giving stock, my creditors are being paid off. So creditors will be debited, and I am also giving out stock. So stock goes out, I will credit stock. So in this case, 1,50,000 worth of creditors are being paid, 1,80,000 worth of stock is being given. So 30,000 I am making a loss. So I would have debited my P&L account or statement of P&L as a place for accounting the loss. Now imagine this is a non-dissolution chapter entry. Now, what will happen the same when you actually are in dissolution scenario? In dissolution scenario, you cannot use creditors account or P&L account or stock account. You are allowed to use only realization, partner's capital, and then cash or bank, and then loan from partner or loan to partner. In realization, you can use only any of these four accounts only. So when you are paying creditors by stock, you are not going to account partners capital, you are not going to use cash, you are not going to use loan from partners. So therefore, the only balancing figure, the ledger that you can use for all these scenarios is just realization account. So the journal entry will be, instead of creditors, I will debit realization account. Instead of P&L, I will also use realization account. And then instead of stock, I will also do realization account. 1,50,000, 30, 1,80,000. Now you see realization debit, realization credit. Therefore, everything cancels out each other. So there is no need to draw entry at all for this situation. So that's the reason why we are saying when you are paying creditors through an asset other than cash, you don't have to write journal entry. I hope this concept is clear. Let me see you in the next question. Thank you.